Hey everyone, this is Mark Treichel with another episode of With Flying Colors. Today I am here with Ryan Donovan, who is the President and Chief Executive Officer of the Council of Federal Home Loan Banks. Ryan, how you doing today?
Doing great, Mark. How are you?
I'm doing great. So you and I met back when you were at CUNA and I was at NCUA. I've had you on the podcast at least one other time,
That's right.
and we talked about some of the challenges at the time. You had just moved over to your new role, and I think there was the 100-year review, which we chatted about there, and we've had some things that have happened or not happened relative to that. But I thought it would be great to just get back, touch base, see what's happening with the Federal Home Loan Banks at this juncture. So I'm excited to catch up.
Yeah, no, that when we spoke before, we were really in the thick of it with that 100-year review. And that started just days after I began my time with the council. So it was definitely like being thrown into the deep end and having to learn how to swim, at least with respect to the home loan bank system. Yeah.
What better way to have to learn everything immediately.
That's right.
Some of our listeners might be learning about the Federal Home Loan Bank or hearing about it for the first time if they aren't familiar with it or if they're not specifically linked to one of the Federal Home Loan Banks out there. If you could kind of walk through a little bit of what it is, the history of the organization,
Sure.
I think that would set the table well.
Yeah, the home loan bank system was created in 1932, and it was created with the express purpose of facilitating liquidity, lendable funds to financial institutions across the country. If you think back to It's a Wonderful Life and the whole problem that George Bailey ran into with not having the liquidity that he needed to meet his members' withdrawal demands at that time, that's one of the problems that the home loan bank system solves for lenders, but it's really so much more than that. We're set up to connect Wall Street to Main Street, and every day, billions, tens of billions of dollars flow through the home loan banks from market to Main Street, and it helps local lenders like credit unions have the funding that they need to make loans to their members, to their customers. We're 11 regionally based home loan banks. And importantly, especially to this audience, we're member-owned financial cooperatives, just like credit unions. So I like to say home loan banks and credit unions are cooperative cousins. And that brings, I think, a real close connection between the two systems.
No, that makes perfect sense. When I think about my times at NCUA, one of the guys who works for me was a capital market specialist, and he would always compare a liquidity event to a car crash when you're in the snow and you're spinning out of control, and it's different than other issues. And the comparison I like to make is it's like oxygen. Liquidity, almost you don't even think about it until you need it, but when you need it, it seems like it's all you need at that moment. Just like regaining control of that car, the liquidity, when it's gone.
Yeah, no, absolutely. One of the I love to talk through metaphors and make comparisons and everything. But when you think about why we use the word liquidity, it's really akin to water. So whether it's oxygen or water, it's life sustaining. And I think that really speaks to the critical role of the home loan banks. We want to make sure that our members have what they need to continue to serve the communities that they're serving.
When you think of the Fed, is often called the lender of last resort. And they've had programs when Silicon Valley Bank popped up, they did some things to create some liquidity, but they are the lender of last resort. And the Federal Home Loan Banks, can you speak to a little bit to how it's a better source of liquidity than a lender of last resort? Or if there were like things that happened that you want to touch on from that era,
Sure.
that would be good to discuss too, I think.
Certainly not duplicative of each other in the marketplace. We serve different roles. We're complementary to each other. In fact, I would compare the home loan bank really to the way that a credit union would serve its members. You're there for them every day, and you're certainly there for them in times of crisis. I know the extent to which credit unions go to make sure that they're providing.
That would be an example of being illiquid.
That's right.
Losing your internet is akin to not being liquid.
You were asking me about the different roles between the home loan bank system and the Federal Reserve. And the point that I make is that they are complementary to each other. And if you're thinking about it in going back to our discussion of the different metaphors, I think the home loan banks are a lot like credit unions to their members. Credit unions are there for their members every day in all economic conditions, and so are home loan banks. And certainly when there's times of crisis, whether that's March of 2023, the COVID-19 pandemic, even through the great financial crisis, the home loan banks have the ability to scale up to make sure that their members have the liquidity they provide, just as credit unions are able to make sure that they're there for their members in times of crisis.
No, that's fantastic. And again, I can tell you when I was there, situations where we were working with a conserved credit union or we were working with a credit union that was challenged, just seeing the ability of it must be that probably that cooperative nature too, right? That you mentioned they're cousins and they operate
Yeah,
similarly. You try to help to the extent you can.
yeah. When I talk to the home loan bank leadership, what they often remind me is that they've got relationships with their members. I think that's a big distinction between the home loan bank system and the Federal Reserve system is that relationship. The home loan banks have to demonstrate a value proposition to their members. They want their members using the institution and comfortable with putting collateral on deposit or on pledging collateral to the home loan bank and being ready to borrow. So that relationship is something that happens every day. It's not something that's simply created at a time of crisis.
Great point. Great point. And then it's an interesting. Before we got on, we talked about living in interesting times,
Mm.
and we've had a change in the White House. There have been changes at most banking regulators, one way or the other, and there's a new regulator of the federal home loan banks, Bill Pulte, was recently confirmed as director of the FHFA. And he's been making some announcements and or making some changes relative to that. Can you speak to that environment and perhaps in general how the current times are impacting federal home loan banks
Yeah,
today?
no, great question. A couple of observations just to lay the foundation for the response, Mark. I think at the beginning of our conversation, we talked about the 100-year review, and that in some ways was a positive experience for the home loan banks because it gave us the opportunity to listen to what our members and stakeholders had to say about us, how they were feeling about us, and what I think came through in that process was that everybody wanted more from the system. Our members certainly wanted us to continue to stay in a position to provide them with the critical liquidity that they need, and they wanted us to be in an even stronger position to do that. We were under a lot of scrutiny in the previous administration, and I think we weathered that well. We responded to a lot of what we heard in that process. With the election, we saw an opportunity to reset our relationship with FHFA. Even before Mr. Pulte was nominated and confirmed, we went to work on what is it that we need in order to continue to be in a very strong position to serve our members, and maybe even a stronger position if we could remove some regulatory burdens that had been imposed, make some other changes to how the agency and the home loan banks operate. And then when Mr. Pulte was nominated, we had already been engaged with the administration, and we made sure that we were really clear in the priorities that we saw, the opportunities that we saw, trying to align those with the priorities of the administration. I had the opportunity to meet briefly with Mr. Pulte in a virtual meeting early on, and he recently took time to meet with each of the home loan bank presidents. This is a guy that's hit the ground running at FHFA, and he is really and appropriately focused on Fannie Mae and Freddie Mac. But he took a part of his very valuable time to meet with the home loan bank presidents to share a little bit about himself and his priorities, what he'd like to see the banks do. And the message was continue to serve your members, continue to operate as businesses, and let me know how I can help you do more of that. And that was a really well-received message from the bank presidents, and we really appreciated the time and attention he has given us, especially given the other really critical work that he's been doing at FHFA.
I think I saw somewhere that he had expressed some interest about affordable housing, and I also remember in some of our past conversations in the last administration, the organizations and the federal home loan banks there's something they're supposed to do relative to that, but they were doing it on hyperdrive, maybe putting extra dollars into that program. If I'm
Yeah.
what could you
Well,
fill in some blanks there as it relates
sure.
to
Absolutely.
that, and then
Yeah.
perhaps on what Mr. Pulte has said about fair lending,
Yeah.
affordable lending. I'm sorry.
Yeah, no, absolutely. Mark, you're absolutely right. So under the Federal Home Loan Bank Act, the home loan banks are required each year to put 10% of their net earnings into an affordable housing program. And really, as a result of what we heard from stakeholders during the review process, each of the 11 banks voluntarily committed to contributing 50% more than that. So taking that from 10% to 15% in net earnings. Last year was the first year that all of the banks achieved at least 15% in net earnings. And we ended up committing $1.2 billion to affordable housing community development initiatives. That's a record for us. And it's saying something because we were already the largest single source of private capital support for affordable housing in the United States. And here's an example of we listened to our stakeholders and what they need, what they were saying, and we responded to that. Director Pulte comes into this role with a great familiarity on housing affordability. It's been something that he's talked a lot about in the first 2 months that he's been in this role. And we're continuing that important work. And certainly that plays out in terms of the affordable housing programs and the voluntary programs that banks operate. But our liquidity franchise also drives our ability to support housing affordability. We had a report done by the Filing Research Institute earlier this year that really focused on how credit unions derive value from the home loan bank system. It helps them grow, it helps them do more loans. And of course, credit unions are in that market in a very competitive way, helping to provide lower cost lending to their members. But a few years ago, the University of Wisconsin did a study that showed that home loan bank activity reduces mortgage rates by 18 basis points and increases mortgage lending by more than 16%. So here you certainly have our contributions on one side, but then on the liquidity side, we're really in a position to really drive making mortgage lending more affordable for consumers across the country. And we're doing that every day. And we think that activity aligns very well with the priorities that Director Pulte, President Trump, and the administration have. And the message that we feel like we've received so far is keep doing that.
That's great. That's in the world right now to hear keep doing that. That's about as good a message as you could hear. And when I hear the numbers 16%, that's 1 out of 6, 1 out of every 6 dollars. That's absolutely amazing. I used to live in Texas. Back at the beginning of my days with NCUA, I was a supervisory examiner 91 to 95 down in Texas. And I remember Pulte Homes. So I'm going to go to Wikipedia, but I'm going to guess that Bill Pulte is the son of or something related to that company down there in the homes, which might be why he knows so much and cares so much about affordable housing.
Yes, he's got housing in his blood. That's for sure.
Yep. Yeah, very good. So from the credit union perspective, anything you can think of that credit unions should be thinking about as it relates to their relationship, if they have a relationship with the Federal Home Loan Bank, and if they don't have a relationship with the Federal Home Loan Bank, what would you tell credit unions today?
Yeah. So there's a credit union that isn't a member of the home loan bank system. I'd encourage them to look for that Filing Research study. It came out in January. And what Filing did was they looked at call reports going from 1994 to 2024. And what they found was that credit unions that are members of the home loan bank tend to grow loans faster. They have more total assets. Their balance sheet is more flexible. They've got higher loan to share ratios. They've got an increased borrowing capacity, and it really helps increase their access to the capital markets. And it does that without having any sort of statistically significant effect on delinquencies or charge-offs. So this is a safe activity that makes credit unions stronger, and the impacts they found were more pronounced on smaller credit unions. So if you're a credit union out there that isn't a member of the home loan bank system, check out that report and then reach out to your home loan bank and look into becoming a member. Credit unions are the fastest growing segment of home loan bank membership. And we love working with our cooperative cousins. We love working with all of our members. What I would also ask is, if you are a member of the home loan bank, when you come for Hike the Hill or for GAC, make sure that's part of the messaging. America's Credit Unions put it in their messaging this year, as did the American Bankers Association and ICBA as well. So we've got the national banking and credit union trades talking about home loan banks, and that's really critical, because I don't want to overstate it, but over the last couple of years, there's been a lot of scrutiny on the home loan bank side, especially on the liquidity side. And earlier this year, I met with the heads of the 4 major depository regulators. I met with Chairman Hopman, Acting Chairman Hill, Acting Comptroller Hood, and Fed Governor Bowman, who's about ready to become vice chair of the Fed, really to reinforce the fact that the home loan bank system is safe and sound and reliable. We're there for our members. We're going to continue to be there. And this was a message that was very well received by those regulators. And it's an important message for credit unions to deliver to policymakers as well.
Great point. You can never, the power of Hike the Hill, which just happened, but credit unions touch a lot of members, touch a lot of people in good ways. So always, if you are a member, I couldn't agree more. If you are a member, when you're communicating, tell people how much your home loan bank helps. It's an option. And I'm thinking, as you were talking about someone who's not a member, life's about having options and maintaining optionality. And I think from what I've seen from my clients and my time at NCUA, somebody who is a member has just one more option. And then it turns into a relationship that's more than just an option. It turns into a key and crucial relationship that helps you help your members. I couldn't agree more.
And I couldn't have said it better myself. You want to have options. And I think the home loan bank system is a great option for credit unions.
Very good. Very good, Ryan. Any other questions I should have asked you here today? Anything else you want to chat about while I have you on the video and online here?
Oh, Mark, there's so many things going on right now, but I think we've covered the beachfront for home loan banks today.
Very good. Very good. Let's stay focused on that. And if someone wants to reach out to you or your organization, what's the best way for them to get in touch with you, Ryan?
Yeah, so we're very active on LinkedIn. And of course, you can reach out to me there or reach out to the council on LinkedIn. That's probably the best way to get a hold of us.
You got it. Very good. Appreciate your time today, and thanks for sharing a little bit of it with my listeners here today.
All righty. Thanks, Mark.
Very good. And listeners, I want to thank you for listening as always. This is Mark Treichel signing off with Flying Colors.